Hi, good morning, everyone, and welcome back to the session on Unit 2 that we are covering now, which is related to the unit How Business and Organizations Work. So, just a few quick housekeeping tips before I start. Um, as always, keep your mics muted. If you do have any questions, feel free to ask me anytime during the course of our discussions. The questions can also be asked through the chat route. This session is being recorded, so you would be able to get hold of a copy of the recording from Moodle just after this session. So just a quick bit of recap. The unit specification that I've got on the screen right now is that we've covered learning outcome 1 and learning outcome 2. Now, this particular unit, as I mentioned to you earlier, is about, how do you set up a business, what type of business you set up, why is the business being set up, the reasons behind it, and also looking at, going into details of what is the structure of the business, legal entity or legal status of the business, and then to a certain extent we'll go into various aspects of it. Financial side, we'll go into the workforce and HR side, and we'll also go into the customer service side. So in the learning outcome 1, what we did was we understood what is the mission, what is the vision, what are the objectives with the organizations are set up, different types of organizations, and what are the factors which basically contribute and differentiate between a profit and a non-for-profit organization. In the second learning outcome, we looked at the customer service and why is it important. One of the most important departments, primarily when the business is well established, you have an existing customer base, and at some stage, you are looking at expanding your business. So customers become important because they are the ones who buy your products and services, and essentially they pay, and that is where the revenue for the company is generated. In today's learning outcome, which is learning outcome 3, we are going to be looking at understanding the structure which is prevalent within the organization, and what is the legal status of the organization when you form, what kind of a legal status or entity can be formed when you try and form a new business or register a new company, say in the UK. It has one assessment criteria, and that is to look at understanding different organizational structures, why they are present in different organizations, and why each of these structures are suitable to run the operations of that company. So we'll take up a lot of examples in this, and then we'll also go into details of what are the legal entity or legal status of how businesses are essentially set up. We are going to look at, in particular, UK as a context, and within UK, we look at England and Wales, and we look at Companies House, and obviously what are the various ways in which legal entities or legal, when I say entity, I mean a body can be set up, which is going to be termed as a business, and they would be things like sole traders, partnership, limited liability company, or a limited company and a corporation. And we'll also look at, sometimes companies are set up for social work, so community enterprise. They are set up as charities, and they are also set up as non-government organizations, which are not in the business of making profits, but they are in the business of essentially providing, useful services to the members of public and wider community in general. So there's just the one assessment criteria in the learning outcome 3 today, and that is what we're going to be looking at discussing. Some of the contents part of it, which we need to refer to, is different types of organizational structures. What are the advantages and disadvantages of each type? And then legal entities in terms of how businesses can be set up. What are the advantages and disadvantages of each type? And then we look at understanding this from a traditional online, and we'll understand the differentiation between when you set up an online business and when you set up a traditional business. So it is important nowadays, keeping in mind everything is going digital, and a lot of businesses today transform geographies. So it is going to be useful for us to understand how businesses set up online are different from the traditional brick and mortar businesses. So we look at into some details by looking at tables to compare these two, and that would help us cover all the indicative content today, which is required to be studied in learning outcome 3. So let me switch you over to a presentation. And this presentation obviously consists of a number of slides. I have tried to cover the indicative content in a great amount of detail, but there would be some ideas and some reading that I would suggest on a self-study basis from the business environment book. And there is a handbook that I've uploaded, which is an extract from a Cambridge business book. And it has a couple of pages in it, and they cover some of the bits that we would be looking at covering today in the learning outcome, which is organizational structures and legal statuses. So let's start off with key terminology, and let's look at, why do we need to study organizational structures and the way businesses are set up as legal identities or legal entities. Now, one of the things that you look at, how do we understand, say, first and foremost, what I would do is understand the meaning of the word, structure. Now, structure, if I look at the Oxford Dictionary meaning of the word, structure means we need to look at arrangement or some sort of relations between two parts of something. It could be a building. If I look at a physical structure, it could be a building. It could be something which is related to um, several parts which could be brought together, and then it becomes a physical structure. And sometimes you look at a structure because you create a construct, and this construct will be a part of an overall plan, and that would allow you to, achieve an overall objective. Now, when I talk about organizational structure, what I mean by that is when I talk about organizational structure, that's me. Generally, we switch off the video in order to, make sure the videos recorded are lightweight. But it'll be good to see some of you specifically, if you switch on your videos during the course of our discussion. Now, I've got a bit of a bad throat, so you might need to work with me on that. But hopefully, during the lecture, I'll be all right. Now, when we talk about organizational structures, what we are looking at essentially is a structure or a system that would outline certain activities and how these activities will essentially take place, within an organization. So when I look at these structures and when I look at the activities which form up, and management of the organization will essentially decide what kind of a structure would be in the organization. They will look at basing that on the basis of, say, certain roles, rules, and responsibilities which staff would take. And these rules and responsibilities which staff would take would actually determine how the information actually flows. Decision-making process typically happens within the organization or within the company itself. Now, when we do talk about organizational structures, we also look at some of these structures can be formed in order to facilitate, I would say, easier functioning of the organization, which means at the end of the day, you want employees to have access to the management, you want employees to be able to access resources, and whatever best way in this to make them available is possible is how the organization structure would be created. Sometimes when we start up small businesses, what we generally get to see in these small businesses is that these businesses would essentially be looking at primarily, say, when they are startup, you have direct access to the director or owner of the organization. And obviously, in some cases, what you tend to do is once, the organization becomes bigger, what you're generally going to see is that they, are essentially going to have some sort of a structure within the organization, which will allow managers, supervisors, to be present and monitor their performance, supervise their performance, or provide help and support, which will allow them to essentially fulfill their roles and responsibilities. So in this case, what tends to happen is what we would do is basically look at an appropriate structure, primarily which would be suitable and workable for the management and the workers, supervisors, employees within the organization. Now, when we look at legal entities and we look at legal structures, what we mean by that, legal structure of a business typically would mean that, sorry, legal structure of the business would typically mean that there are different categories that can define how business or an organization or an entity, whichever way you refer it, can register with the government and come under some sort of a legislation wherein it can be regulated. So a company's business legal structure determines how it pays taxes and the degree to which it takes on liability. And that could be a liability which is, in some cases, when we look at a limited liability company, some part of that liability is with the company. And in some cases, some part of the liability can be with the director of the company as well. So when we look at degree of liability, we will go into legal entities a bit later. But at this stage, what I would suggest is just to understand that when businesses are set up, they need to have some sort of a legal status of their own. They need to have their own standing. And in that case, when we look at their own standing, we talk about the legal status. Now, companies can be set up in different structures and different status. They, as I mentioned earlier, they can be set up as sole traders, partnership, limited liability companies, limited companies, PLCs, or large, public limited corporations, private limited corporations, non-for-profit organizations, commercial or social enterprise, charities. And depending on the role and responsibility of the entity and how they pay taxes, how they are governed, what kind of memorandum of understanding does it have amongst its shareholders or its directors and management, and the degree of liability that the company has when it trades in the market or let's say sells products and services in the market, they would all be covered under what is called the legal status. Now, when we look at various legal structures, that is, or when we start looking at structures and look at legal status, let's go into a bit more detailing right now. Now, when we look at organizational structures are of 5 basic types. Although over the years, there are other structures which have also come up, but generally speaking, what we will see is that there are 5 basic type of structures. The first one that we look at is called hierarchical structure. Now, this hierarchical structure is basically a top-down approach. What you will generally see is that the head of the organization would be at the top, and then there'll be a clear chain of command which basically follows down on various departments and lower into the organization. This kind of a structure would typically be run wherein the CEO, the management, would be running strategic objectives, which we studied about it in learning outcome 1. The mid-tier would be running tactical objectives, and the lowest tier or lower management would be running operational objectives. So operational would be day-to-day, tactical will be short-term, 1 to 3 years, and strategic would be long-term, which is 3 to 5 years. Now, this particular structure is based on the classical management theory, wherein it means that you need to employ people who have a specialization in a particular field and an area, and given the task and given the responsibility to them, they would be able to go ahead and obviously bring that to completion. Sorry. A hierarchical structure is easily identified because it is normally in a pyramid shape. That means for decision making, there are layers in the structure or in the organization wherein decision, or I would say distributed decision making, is allowed. But when it comes to major decisions or strategic decisions from a point of view of the organization, what we are looking at is they are something which is primarily taken mostly at the top or by the top management. So in short, when we look at a structure which is primarily hierarchical structure, you would normally find them in big or small different organizations, and they would be essentially looking at making sure that there are appropriate people or heads in the organization which are able to send them or basically give them responsibilities, and they are then able to essentially carry them through for the purposes of completion and closure. Now, when I talk about hierarchical structure in general, there could be some advantages and there could be some disadvantages. Now, this is one of the key things that we need to look at. And when we look at advantages, they tend to be that there's a very clear line of authority amongst this structure. There is a very clear line of communication. Achievements of result, is something which is primarily clearly defined. And because there is, achievement at each level, because roles and responsibilities are clearly defined, the achievements are attributed to individuals which are working at that particular level or in that particular role. Now, some of the disadvantages can be that people could work within isolation and silos. And the other would be that centralization of power sometimes makes the decision making too prolonged as a criteria. And in such cases, you would see that there could be sometimes communication difficulties. And because there is no power vested in terms of decision making, everything has to go back to the top management to be sanctioned. And in those cases, you would see this becomes a bottleneck. Okay, now let's look at the second structure. Now, which I would want to do is basically talk about flat structure. So when we talk about flat structure, contrary to the hierarchical structure, would essentially be where the management of the organization has, or employees, let me put it this way, the employees, the first level employees or the front line of the organization has full access to the management or the top management. Now, this kind of a structure would be present wherein there are fewer layers of management involved. It could be a company which is a startup. It could be a company wherein, when you look at most Japanese organizations, they are, mostly quite hierarchical, or they are quite flat in terms when we look at department level. And in such cases, it encourages more open form of communication. It encourages a lot of teamwork, and they tend to be the advantages. Now, this particular structure originates from the human relations theory, which talks about and pays emphasis on that employees and their relationship and their autonomy in terms of working in teams, and also at the same time, having participation from each member of the team makes things happen within the organization. That means if people are working together, they are working in unison to be able to achieve objectives, then the organization achieve objectives, and the management of the organization focuses on paying emphasis to employee, staff, and their welfare. And that is why these organizations typically tend to have, faster decision making. They have better communication. They have also what is called better teamwork amongst the employees, because all the departments and the role and responsibilities are decentralized. And in some cases, you would generally see that these people also work in teams. And because they work in teams, it allows the employees to achieve greater objectives within the organization. Now, sorry, there are some disadvantages of this structure as well. One of the disadvantages of this structure is that there is a lack of specialization. So this kind of an organization would normally have a lot of managers and a very few people who contribute in leading the organization or vision, creating the let's say contributing to the vision of the organization. There could be potential conflict of interest, because as the workload increases and there is lack of specialization and demarcation between where your work starts to where your work stops, it could lead to some sort of potential conflicts. In some cases, people also look at hoarding. That means they tend to be very, let's say, possessive of the roles and responsibilities that they are given, and in some cases, decision making that they have as a power. And in such cases, what tends to happen is, because of the possessiveness and because of the lack of the clear, let's say, specialization, there are potentials of conflict between different forms of, I would say, different forms of conflict. And this conflict could be conflict which would originate because of increased workload, or because of not a clear demarcation available between the roles and functions which employees need to perform. And this kind of a structure, if I look at, flat structure typically looks at, when we talk about this, this could be present primarily in, organizations which are primarily, startups, or organizations which are essentially having very, let's say, motivated and passionate and mature employees, wherein they understand the importance of the work which is given to them, and they are quite experienced in the aspect of actually completing and taking that task to completion. So when you look at flat organizations, you could see them in small companies, medium companies, large organizations, but it tends to be where people or working staff, employees within the organization have good number of years of experience. They have prior experience of working within that role, and they are a specialist in their role, so that given the task, they are able to take it to completion. Examples of this kind of organization you would generally see, if I put this as an example, I would say, for example, Netflix. We are aware of Netflix, which is primarily over the air provider of content. And today, Netflix, if I look at the way they are structured, they are a good example of flat organizational structure, because it provides ample freedom to employees to be able to work from home or work from the office. And obviously, because of the decentralization of operations of the company and centralization of some of the operations of the company on the IT side within the head office, it requires this kind of a structure to work. Another example that I would give would be, Google. Google is also an organization wherein there are very few managerial roles. All employees can move up and down the company as required in order to perform their roles and responsibility. The structure in Google, typically flatter structure in Google, typically allows for faster communication and decision making. And this is something which, when we do talk about, as an organization like Google, you would generally see that, it is something which is a surprise that some of us will see that, okay, this is something which is probably not, should not be there. But when we look at a particular department or a particular, type of product in which how they are defined. So Google has Google, say, for example, search engine, Google advertising, YouTube. There are lots of other platforms which, Alphabet, which is the parent company of Google, which owns. And you would see that in each of these organizations, there is a flat structure. There's a CEO or somebody heading the organization on the top. And then there is a series of managers who essentially look after the day-to-day running of the department and the organization. And that is where it would be termed or classed as a flat structure. Let's look at the third type, which is matrix structure. Now, matrix structure combines both functional and divisional structures. Now, when I talk about functional structure, sometimes we see organizations are essentially grouped into having various departments like finance department, administration, operations, engineering, sales, marketing. These are basically departments. So they are organized on the basis of function. People who are within these functions typically would be, or within these departments would be essentially working because they have the same profile, they have the same work experience, and they have similar objectives or experiences from prior places of work to be able to work within that function. So when I look at, functional structure, you have, IT, finance, HR, and marketing. Now, if I merge this with divisional structure, that means there are different divisions of the business. Google, for example, or Microsoft in this case, for example, has lots of different products. And what they've done is they've divided the products into different divisions. So you have Xbox as one division, Bing as one division, you have Windows as one division, you have cloud computing as one division. And what tends to happen is when you mix and merge both these structures together, wherein you have divisional structure because they are based across in different geographies across the world. So you have Americas, you have Europe, Middle East and Africa, and then you have Far East or Asia. So when you look at these divisions and how the structure of the organization is broken down to address the local market, you would generally see a combination of functional as well as divisional structures coming together to form what is called a matrix. And an example here would be, if I'm based in the UK and I'm a product manager for Xbox, I might be working within a division in the UK, which will be a part of UK and Ireland or Eastern or Western Europe, essentially. And I might report into administratively or functionally to a chief executive or vice president within this particular geographical area. But in terms of my function, which is primarily because I'm a gaming product manager, I might be reporting or have an indirect reporting to the group product manager of Xbox, which is based in Redmond in the US. And that would be functionally, I work more closely with him, but I tailor my day-to-day responsibilities and deliveries of my roles and responsibilities to a specific market. And that is why I'm a part of the UK and Ireland or Western Europe division. So sometimes bigger companies characterize or, create structures which would essentially be working, let's say, in, sorry, working better in terms of, the operations for the operation side of the organization, and those would be instances where we would primarily look at talking about the matrix structure. Now, this would basically mean that the organizations are quite large, and in some cases, when you look at large organizations, they would need to have this as a structure, and they would be, it will be well suited for the running of the day-to-day operations. Now, when I talk about advantages, the advantages are that because of this structure, you're able to break down departmental barriers. You're able to improve communication or flow of information across the organization. You're able to have individuals working within the same division with different kind of skills, and that allows you to bring together a skill pool or a skill set, which is sometimes required for, say, example, a product launch which is happening in Europe, and UK is leading the product launch. So in such cases, you're able to pool skills and talent together from different departments using this structure. It also encourages motivation because people tend to move between different roles, and they see this as a bit of a job rotation, which the company helps them provide if they're performing well in the existing role. And when internal vacancies come up, people are able to take these vacancies or job transfers or, things in terms of rotation because of the flexibility of, movement within the organization. Now, there could be disadvantages. Some of the disadvantages tend to be sometimes these structures become too big and too difficult to coordinate activities to bring them to a conclusion. Also, sometimes there is not a very clear line of accountability between these structures, and that tends to be a drawback because, sorry, functionally, you might be reporting to a head in the UK. Sorry, administratively, you would be reporting to a head in the UK, but functionally, you might be reporting to the head in US. And that is where your clear line of responsibility in terms of accountability blurs, because if the regional targets are not achieved, then you can also say that, okay, my targets were set, by the group product manager. And in some cases, the focus was to look at market share versus revenue. And that is where the push and pull tends to happen when we talk about the matrix structure, wherein team members sometimes neglect their functional responsibilities, which is day-to-day functional responsibilities, but focus more on, the divisional or, the functional side of things within the organization. Now, let's look at the next structure, which is talking about network structure. Now, a network structure primarily tends to be, a structure wherein you would see a collection of independent organizations working together to be able to deliver an objective. Now, this kind of an organization, best example to share would be to look at a project management or a project division kind of an organization, wherein you would generally see these organizations have independent operations in different countries. They are, independent entities themselves. And that is why if I relate this to an example of Meta, which Facebook has created now, which is the parent company of Facebook, and some of the other companies it owns, like Instagram, Pinterest, WhatsApp, and a lot of other businesses that it runs. Now, similarly, when you look at Google, which has Alphabet, and you look at Microsoft, you will look at that these large organizations, when we talk about a particular business in a particular geography or in a country, they are so big and independent because each of the business within the geography would have their own marketing, finance, administration, sales, business, and all the other departments. So when we look at a collection of independent organizations which more or less work independently, if I look at Unilever, it has more than 400 different products. And each of the divisions, when we look at, say, for example, you look at soaps division, you look at, I would say perfumes division, they are so big that within themselves, they create revenues of in excess of between $2 to $10 billion. Now, and within that, they have different products and different brands. So when we look at each of these as independent organizations, they share their skills, they come together, they are able to pool their resources, but they're able to work independently as an organization to deliver objectives. Now, this structure is becoming increasingly popular, especially in the digital age, because technology enables a lot of things. For example, you are able to now do video conferencing, connections through telephony, email, and internet. And a digital presence can be used to primarily augment or substitute somebody's presence in a location. And this allows agility and obviously adaptability at the organization's end. Now, what do you mean by adaptability? For example, when organizations look at launching something, a lot of the material for a product launch would need to be physically sent over. But because these are things and activities which the companies do time and again over the years or every 18 months, what will happen is there will be a core team which will be available in each of the geography to be able to run this as a independent task. And that is where they will draw upon the different resources, skill set to be able to pool it together to be able to carry that particular task. Now, when you look at Apple, they do only one launch, for example, in Palo Alto in California. Now, that launch tends to be a worldwide launch, but there are smaller versions of those product launches for a new iPhone or a new product which they launch also tend to happen in other independent countries and places where Apple is present. And that is where this network organization structure actually comes into play. And when we look at this as a structure, it works very well because each of this particular head or the structure which works as an individual or a collective organization is able to carry off all the functions. And that is why when we look at network structure in organizations like Starbucks, you look at Zara, for example, they would have basically advantages of dealing with local market, local preferences, setting local prices, and having fewer tiers to be able to make management decisions would allow them to have a good control on the operations of that geography and thereby contributing towards profitability of the overall organization. So when we talk about network structure, this can be centralized and it can be decentralized. And these structures have very few tiers, so their span of control tends to be quite wider, and they are generally, configured or set up in a way wherein decision making and idea generation can happen within that particular geography or within that particular, division or let's say location of the organization. The only disadvantage which typically tends to be for the network structure is that the structure tends to be very fluid. It can change, chop and change over the years, and that can sometimes lead to complex management requirements in terms of managing the structure. So when we talk about network structures in general, we would look at a disadvantage wherein if there are multiple teams trying to do similar jobs, or if there are, let's say, sorry, I'll give you an example. Sometimes you have lots of heads which have the same skill set within the same area. And in those cases, you would look at organizations making redundancies every few years because they feel that they have this replicated skill set across, the organizations. And in such cases, it tends to be detrimental for employee relations or obviously reputation of the company because large scale redundancies, when they happen across various structures or organizations, tend to eradicate people with duplicate skills or skills which have been duplicated within the organization. So that tends to be the major drawback of, structure in terms of network structure, decentralized or, centralized. Now, any questions at this stage if you have? So these are the four basic types, and you can look at different types of structures as well, which can originate. And there is a handout which I will provide, which will give you other types of structures which can actually originate from these particular four types of structures. Now let's go to legal entities. This is the second part that we want to cover as far as the discussion today in the learning outcome is concerned. So what are legal entities and what are the various legal entity status of the organization? So when we look at forming a business, what we are looking at is basically understanding that how would be this, the let's say what would be the best way to essentially form the structure of the organization. And in such cases, when we are looking at ensuring that basically the company structure or the legal entity formed, essentially should be in a way working towards achieving the objectives of the organization or the vision of the organization, which is normally set by the management. So when we talk about legal identities, and their definition, the key part that I want to look at is that, when I talk about my own legal identity, what is my legal identity? My legal identity is basic, like I'm a Sikh, I'm a male. That is my individual identity. I'm born in a particular place in Manchester, for example. My date of birth is this, and these are basic attributes of basic attributes that are required to register myself, say, for example, to become a voter or get a birth certificate or a marriage certificate. And these are basic characteristics that I need to have to be able to create my individual identity. Similarly, when we talk about legal identity and when we talk about, identity in terms of law, the logic behind it is that what we want to do is we want to create something which is unique. It's not identical. It is something which is primarily going to be representing the type of business, or and then representing a different type of business, and also would have documentation which would enable the company, which is a legal entity, to be able to access rights, benefits, and responsibilities, and execute, responsibilities within a particular country where they are registered. So when we talk about identity in the UK, what we mean by that is there are different types of people which come from different backgrounds and ethnicity, but in order to simply put it, who are you is what I would say would be the individual identity. Similarly, when we talk about a legal identity in the form of company, and a company which is being formed, that would be how a company can be incorporated. Why will it have its own legal status? Can it hold assets? Can it have, can it enter into contracts? Can it be sued if it doesn't perform its functions? And who would own the company? And what would be the, say, for example, dividends or profits? And how would they be shared amongst the promoters or the, let's say, directors or the owners of the organization? So when we do talk about all this, what we are looking at primarily is, uh, you know, ensuring that we know what and how do we set up this as a business. And that would be, looking at setting up an identity for the organization. Now, when I talk about, different identities, what we are looking at is going into details of, understanding how these legal entities, which is business or organization, essentially can be set up. Now, when we look at that, we will look at a couple of things. First of all, we will look at that companies can be set up as what is called sole traders. So when we look at sole traders, we are basically looking at that this is the simplest form of entity which can be formed. And this simplest form of entity which can be formed essentially would be looking at, being operated by the individual who's the owner or maybe the director themselves, and they would personally hold any responsibility related to the entity when it is formed in terms of both liabilities. And if you make money and you make profits, it is still going to be, everything is going to go to the individual. Now, this particular identity is operated by one individual, if I put it this way, and that will be the safest way to say that yes, they are going to be, one individual, and the difference between the business entity and the owner's money is very blurred. So whatever owner makes, puts into the business, whatever business, the profit the business makes, the owner can potentially withdraw the business. So the debts which businesses have can also be the debts of the, owner. The second type of, legal entity that we look at is talking about, partnerships. Now, when we talk about partnerships, from a company business, what we are looking at is primarily ensuring that a couple of partners, like sole traders, only one, but in this case, a partnership would be a formal arrangement between two or more parties or individuals who would agree to manage and operate the business and obviously share the profits. So here, the share of losses, share of liabilities, share of profits, which the partners make, is equally shared amongst themselves as per a memorandum of understanding. And when you look at setting up a partnership, there could be four different types. It could be a general partnership, limited partnership, limited liability partnership, and it could be limited liability limited partnerships. Now, we don't need to go into details as of now, but we need to understand broadly what are the four or five different types of legal entities which the organizations can form. The third one would be, corporations. So when we talk about legal entities and their types, let me show you a good handout which I'm going to share with you, which is on Moodle. And these different types of entities and different types of handouts that I'm talking about, sorry, this handout that I'm going to talk about will primarily be very useful for you to understand in a nutshell Why is it that we look at these kind of legal statuses when we talk about forming the company and forming it in such a way? So let me just bring this up on the screen so that we can discuss this and look at this as a bit of a activity and an example to cover this particular task. So let me just share my screen. And here we go. So this particular handout that you see on Moodle as well is basically covering all the different types of ownership that an organization can have. And when you register the organization, you're registering it as a particular legal entity. Under, say, in England, if we talk about, it'll be the Companies House in England and Wales. And when you register the entity as a sole trader, there is only one owner. The liability is unlimited. That means sometimes if I start a new business, say for example, a plumbing business, and if I look at starting a plumbing business, I want to get some loan to be able to buy tools and say, for example, set up a shop, then I might need to go to the bank and bank will ask me questions about where the money come from or how you're going to fund the activities of the business, what is the projected turnover in the first year and how you're going to manage, and what if our assets that you have that you given can you give as guarantee if we do let you take out a loan or an overdraft facility or help you open a bank account to be able to run the business. Now, in such cases, the liability on the business tends to be unlimited because sole traders are self-employed individuals essentially who register with HMRC to pay taxes via self-assessment. And if your annual turnover is over 85,000, you're also expected to register for VAT, which is value-added tax. And then you are expected to charge VAT on the invoices as well. Now, these kind of businesses aren't here the owner is actually not considered individually separated from the legal entity. So the business owner and the organization, say for example, if you name the company as Manchester Plumbing, would have very blurring lines of distinction between who's the owner and who's running the company. So if you choose to become a sole trader yourself and your business is one, it is basically one and the same according to law. So here, whatever money you make, you keep. Whatever losses you have to bear. And obviously, any capital that is required to be able to start the business, you will bring in. Similarly, partnership, when we look at, there are obviously advantages and disadvantages. We'll go into that in a bit more detail later. But when you look at partnership, partnership tends to be, two or more individuals coming together to be able to run a particular business, and they tend to share this and register the company or the legal entity as partnership. So here they will have a memorandum of understanding. That memorandum of understanding will essentially dictate how they would work, what are the operations of the business, who takes care of what. And in some cases, they would be looking at defining various aspects, like if we have to take on a partner on board, what skill and experience they bring in. An example here would be, say, accountants or solicitors. And the reason I put that across is that when you look at solicitors and solicitor firms, or you look at care agencies and care homes, they tend to work together in partnership because they are able to then share resources, skill sets, they're able to share infrastructure, and some of the other related areas in administration, manpower, knowledge that they have accumulated over the years, and this allows the businesses to prosper. So an example of a solicitor business would be, say, I'm an expert in immigration, you're an expert in family law, somebody is expert in, say, for example, divorce law, you are expert in commercial law, and somebody is expert in intellectual property law. So what we need to do is, if we are to look at gathering or getting more business, we could form a partnership under one banner, and there is where we would attract all these type of business coming in or inquiries coming in. And depending on when the inquiry comes in, the respective person would swing into action and obviously handle that inquiry. And that would allow shared knowledge and experience to be able to establish a partnership firm, which would be beneficial for all the partners. And they would be jointly also liable for any liabilities which do arise because of the business operating of the business. Now, the next one tends to be a private limited company. Now, here you could have two or more owners, directors of the company. The type of liability which the company has is called limited, because in this case, the company which is set up has a limited liability, and that would mean that if the company is a separate legal entity from yourself as a director, there are tax benefits which are going to be, taxes which the company would need to pay, and there will be taxes which the directors and owners need to pay. You would also be responsible for ensuring that the operations of the company are meeting the regulated guidelines of where the company is registered. So in this case, England and Wales. And obviously, in some cases, because you're the director, you're also the shareholder of the organization. So the end of the year, when you file your profits and your returns with HMRC, you're expected to draw dividends, or obviously look at, finalizing the accounts of the company. And that could mean that you would be in line to receive some dividend. You would have losses, or in some cases, you might decide to keep the profits generated in the first year as savings within the company. And these are easy to establish because of the fact that the companies have the liability on the owner of the organization is different from the liability of the company director or the legal entity. And here in this case, it is easier for the banks and other institutions to deal with the legal entity directly. So being incorporated as a company gives you a sense of security, and that sense of security comes in because your responsibility and your individuality is different from the company. You are also the company director, but the company's liability is company's liability, and the director's liability is director's liability. And that is where most companies, when they start off and you have more than two owners, then they would look at this being set up as a private limited company. A public limited company essentially would be, a company which is primarily looking at, more two or more directors or owners. But in this case, what you would look at is a company which is managed by directors and owned by shareholders, because the company is listed on the stock exchange, or maybe the shares of the company are with multiple people within the organization. And that is where you would have what is called a public limited company. So a public limited company in the UK would be primarily, having basic, I would say, pros and cons. And that would be that this public company in the UK would be, I would say, uh, sorry. So if I define a public limited company, this would be legally attributed as a PLC, and is a type of an organization wherein it is publicly traded on the stock exchange. That means it has limited liability, but the company shares can be owned freely by members of the public, or banks or directors or shareholders, and they would obviously share the proceeds of profit depending on what the company is doing and how the company is operating. So it could be made up of two or more directors, more shareholders, and the owners would have limited liability, but the shareholders would also get the proceeds of the profit. Or if the company makes losses, then the shareholders would also need to, in some cases, lose their dividend, or obviously in some cases do not get dividend for the year. And this kind of a company is incorporated by shareholders. So here you would generally see if the company has 1,000 shares, and these 1,000 shares are traded on the stock exchange, say London Stock Exchange. The shares are traded on the stock market, and members of public can have ownership in this company. You might buy 1 share, 2 share, and you might become a part owner of this company by having a share that you bought by paying certain amount, and that would be a public limited company. So here, these companies tend to be large organizations. They have large number of employees. The directors are appointed by the shareholders. There's an annual general meeting which is held every year. Companies have to declare profit and dividends, and their annual reports have to be audited. And these tend to be companies like Marks and Spencer, Barclays. You talk about Virgin Media, any company like British Airways, and they would be treated as, public limited companies. Then you have cooperatives, which are having multiple owners. An example of this will be Co-op. You look at NISA Local, you look at Premier. These are all examples of cooperative, and here the liability is limited. Workers, John Lewis, for example, is a cooperative. The workers or the employees own shares of the company. Their capital or the profits are, obviously shared by the workers and the employees and the management of the organization. And here all of them carried limited liability. They have a say in the running of the operations of the company. They share profits, they share decisions. Decision-making power is decentralized, and obviously, if the company is doing exceedingly well, the company's shareholders or employees essentially would get more benefits or more dividends. Then you have governmental agencies, which are non-government organizations. They are formed up of unlimited liability because government underwrites it. They could be local councils, authorities, which primarily collect and work on behalf of the government to collect and maintain and provide services. So collect would be, say, for example, the council tax that we pay, taxes they collect, parking facilities they maintain, hospitals, schools, and in return, the taxpayer essentially funds these companies or non-governmental organizations primarily through paying value-added tax. Businesses pay corporation tax, personal income tax, and they tend to provide what is called public services. A good example of this would be the National Health Service. You look at other organizations like the armed forces, or if you look at organizations which are predominantly Congos, as we call them, semi-government organizations like Ofcom, Ofgen, Ofvat, which are primarily regulators of different types of services which the members of public get, but they are run in private public partnership, and these kind of operator companies essentially set rules, regulation, and legislation for the companies to work and operate. We have charitable trusts or charities. These charities are registered as charities. There is a charities commission in the UK. They are usually having unlimited liability. The charities do not have directors, but they have trustees. So their role is primarily to manage the organization and the operations of the organization. Their main role is to tend to raise funds or donations through which they will be able to fund their operations. And these companies also depend on government handouts, and they also then have their donors and obviously memberships, which members essentially take for certain organizations. When we talk about Christie, Macmillan, Red Nose Charity, look at Manchester Bee Charity, which is funded, and it's a charity which the Lord Mayor of Manchester owns. These offices essentially own up and run the services, essentially run the organization through trustees. And the role of these organizations is to provide public services or absolutely free services to members of public which cannot afford or are disadvantaged from a particular, from a background point of view or from a economic situation point of view. So, sorry. So when we talk about charities, they are set up by registering with the Charities Commission, just like Companies House, and their rules and regulations are governed by the Charities Commission, which essentially at the end of the year requires the charities, registered charities in the UK, to file their accounts and obviously declare the donations and the key members through which they've generated the funds and donations, and where the expenses have been, where that money has been used and what all expenses have been incurred by the organization, and they would all be covered under by filing an annual report, which is basically with the Charities Commission. Now, I hope with this discussion, you've had a good amount of understanding in terms of the organizational structures and also the legal entity and how the companies are formed and what are the different types of legal structures. Now, there's a video that I have, which I would suggest that you need to watch offline, which basically explains the legal entities which can be formed and how companies and different types of organization businesses can be formed in the UK. And there's another video which I've taken from Tutor for You, and that basically allows you to understand the different forms of how the organizations are structured when we talk about legal status. So you could have public sector, private sector organizations. Within private sector, you have unincorporated and incorporated organizations. Unincorporated tend to be sole traders and partnership, where there is blurring or there is a blur in between the roles and responsibilities of the director and the partner or the owner of the organization. And incorporated means that they are set up as a PLC or a private limited company, PBT, LTD, and they tend to have very clear lines of distinctions between the director, owner, and the legal entity itself, which has been formed. Now, the task which is there in the learning outcome allows, basically asks for you to analyze the different organizational structures and legal entity status of the organization. And what I would suggest in this case would be to go through some of these slides, because what we have to do is cover the when it talks about, one of the things that you also need to understand when we talk about, tasks which are given in the unit, they are all based on what are called, command verbs. So when I do talk about command verbs, one of this assessment criteria 3.1 talks about analysis. And analysis is a higher order command verb wherein you have to not just explain, describe, define it, in about 30 to 50 words. But here, analyze means what you have to do is identify separate factors of why and how each different type of structure is useful and why it is implemented within an organization, and similarly for the legal status. So if I have to analyze different organizational structures, what I would need to do is identify separate factors, say how they're related, and how each one contributes to the topic, which is why is it an organizational structure and why is this legal status suited for the company. So here I would need to talk about advantages, disadvantages, provide some arguments, take an example of an organization and say, okay, if I talk about hierarchical structure, these are the advantages and disadvantages. And an example of hierarchical structure would be, say, Sony Corporation. If I talk about a flat structure, I might go about and talk about an organization like Starbucks, and that would be a flat organization. If I talk about matrix organization, I might talk about Microsoft and talk about the characteristics and of why this structure is optimum for the company and what are the advantages and disadvantages. When I talk about network structure, I talk about structure like Starbucks or other organizations like Amazon or Google, and why do we talk about this structure being ideal for the organization. Again, you have to list down advantages and disadvantages, and that would allow you to cover this particular task. Similarly, when we talk about legal identities of the organization, here you're expected to talk about the legal entity status, which I've shown you on a Word document, sole proprietorship, talk about advantages, disadvantages, talk about partnership, talk about PLC, public limited corporation or PLC, talk about limited liability company, and talking about them using a small, example at the end of it by quoting an example in context to why this is right and why this is the best way to form this as a legal entity, and talking about the advantages and disadvantages would essentially help to achieve this particular task and the criteria. Now, last but not the least, what we want to be able to look at is comparison between online and, traditional business models. Now, when we look at the difference between the two types of businesses which are being set up, they are being set up in two different ways. One, if I look at online business, it is mostly set up using digital technologies. You need to have a website, you need to have a hosting space. Obviously, some of the legal part of things would remain the same. If you want to start a business, you have to register a business. That means you need to decide the legal entity of whether it'll be a limited company, limited liability company, a partnership, or you'll start off with as a sole trader, and as your business expands, change the identity of the organization, legal identity. And then when you look at traditional business, you'll have to go through the same rigmarole of setting the business up by setting it as a legal identity. Now, what are the differences when we come to the two types of business models and structures? So what we need to do is, I have looked at comparing the two across three different parameters. One is the operational model, second is the organizational framework and strategy, and the third is customer engagement and market reach. Now, across these three parameters, I can actually discuss and show and highlight the differences between online business model and a traditional organization set up as a business. And then towards the end, what I've done is I've also mentioned advantages and disadvantages of online business and a traditional organizational structure set up business. So in operational models, we talk about, things wherein you have digital platforms. That means you need a website, you need a domain, you need an expert who would be able to set up your website. And most of the outreach and activity that you would do to the customer will happen through the digital channels. That means you'll be looking at selling your products and services predominantly online. Here, you would be characterized by things like people working from home, or in some cases, they might work in digital workspaces using your CRM system, and most of the communication with the customer and obviously with your employees would tend to be through email, phone, or web chat, or some sort of a chat which is available as a virtual space. And this particular model would heavily rely on technology. So if the internet is to go down, or if the electricity goes out, or if you have a fault with one of your systems, then the whole operations can be essentially affected. When we look at a traditional organizational structure here, you will have a physical premise, you'll have an office, you'll have stores, warehouses. You'll be basically running some part of the operations face to face. There'll be employee meeting the customers. The customers might be coming into your stores like Marks and Spencer, Argos, for example, although you order online, but you go into the store to be able to collect your item. If you need it urgently, you can also order it online using Argos online store, and that can be delivered to your home, but you end up paying a delivery cost. So here you have the advantages of running a business online, but also the traditional advantages of having a business which is set up in a location, which is run by employees, and you have the access to meeting the customers. The downside of this could be that during COVID, for example, a lot of traditional businesses were facing high costs in terms of retail costs or rents, essentially at high street. And that led to a lot of businesses going bust because they were not set up online. They had an online presence, but did not have an online presence which would help them survive the downturn which was created by the COVID pandemic. So there are pros and cons of setting up the business on both sides. But generally speaking, a lot of companies over the years, if you look at John Lewis, they've opened up an online operation. You look at Argos, which was acquired by Sainsbury. You look at, for example, Tesco, they have an online division. You look at Marks and Spencer, they have online division. So what most companies have done, which have been operating as traditional companies or traditional brick and mortar model, what they've done is over the years, they have essentially, diversified and had presence, for, creating online presence, and that allows them to run, these businesses. So when I talk about, um, you know, um, the disadvantages, for online versus traditional, there would be a few in both cases. But generally speaking, that is what you need to take a decision on when you look at essentially, setting up a business and looking at the operational model, the framework and the strategy, and then obviously customer engagement and how do you want to look at market reach. One example of market reach would be that why a lot of businesses have created online presence is because it allows them to reach customers 24/7, not just in their geography, but go beyond countries and go beyond geographies. And that is why one of the reasons is that a lot of businesses have now started to have online presence because it allows them to reach customer in different locations and in different geographies. They are able to target customers through social media and also look at personalized emails, newsletters, things like that. A traditional business might be limited because of the location, place, as we call them in the marketing mix, and until unless they open up a branch or another outlet in another location, sometimes you would see customers might shy away to go into other locations to be able to buy, their products or their services. Sorry. IKEA, for example, is a very good example that I would say, which is of a traditional organizational structure. If you look at Manchester, IKEA has two stores. They are generally quite far or outside the city. And if people are deciding to go and shop at IKEA, excuse me, they have an option to either shop online and get it delivered at home, but that does not deter the company from increasing its business through the stores wherein they are regularly investing. And obviously, that business has been going for over 50 years now. So think of examples that you can relate to when you talk about the two different types of businesses, online versus traditional, and that would allow you to understand this particular aspect of learning outcome 3.1. So this brings us to the end of today's discussion on learning outcome 3, which is focused on understanding organizational structures and legal entities. If you have any questions, feel free to ask me now. Okay, so if there are no more questions, that's fine. I would end the session here, and I will then be catching up with you to discuss Learning Outcome 4. And in that, we are going to be looking at understanding resource requirements for business. If you think of any questions in the meanwhile, feel free to drop me an email on LearnerWork, which is here, and that should allow you to, and as I get that email, I'll pick it up and I will obviously send you additional information your way for reading and more understanding. So thanks so much.